Hey guys, per usual, everything on this channel is for educational and entertainment purposes and is not intended as financial advice. So I know I've been talking a lot about PBOC, People's Bank of China. It's important to understand why, I think. So if we look at Bitcoin trading volume over the past few years, basically what you're looking at is countries, currencies, whatever, and how trading volume has essentially been eaten away by China. So the next graph I'm going to show is just like this here. So if we go to this, you can see that, market share has certainly gone down since PBOC announcements. But if you look at the axis here, you can see it's still an insane amount of total market share. So if something happens in China, that's of course going to affect the entire Bitcoin market. Bitcoin's not that big. And when one country is basically trading 95 or more % of it, yeah, we're going to feel that on all of Bitcoin. So if we connect the dots a little, I'm looking at hash rate. I don't know if there's new ASICs coming online from somewhere, somebody, but usually that's the case when we get a giant spike like this. It's like a pool somewhere in some like country or place that has cheap electricity or something. I don't know. But usually when we get a spike like this, it's something like that. I haven't really looked into it, but it's pretty interesting that difficulty is still increasing despite the major pullback in price. So maybe the all-time high sort of gave more visibility towards Bitcoin and the possibility of, getting rich or whatever, mining Bitcoin. I don't know if that was enough to push enough people to buy rigs or whatever. I'm assuming that these rigs were all bought months ago, or these cards, whatever it is. So I don't think current price influenced this. This is likely previous price, but I might be wrong on that. Here's SegWit signaling. You can see basically still 25%. Again, most of the miners are in China. I don't think Chinese miners have much incentive to switch to SegWit. I think they benefit from higher transaction fees and a clogged network. It sounds weird. Maybe they don't. Maybe I haven't really done the math or looked at the math. Maybe they benefit from more transactions at a lower transaction fee cost with some off-chain stuff. Whatever. Point is, I don't think the Chinese have much incentive right now for that. I'm looking ahead to the Bitcoin ETF coin. COIN, the Wyckoff ETF. The announcement should come by the SEC around March 10th or 11th, one of those days. So based on some financial thing, I don't know who Needham is. I'm sure someone does, but they said the probability is very low. So I'll link this article in the description below. It's also interesting that GBTC is looking to be listed on the New York Stock Exchange. That's kind of exciting. Again, any more visibility towards Bitcoin in any way, shape, or form is always a positive. So that's great. And here's another ETF I'd never heard of until I started researching for this video. SolidX. They have one of those cool side down scrolling websites, so they're legit, right? Apparently they're an insured ETF. I don't know anything about them. If anybody knows anything about them, let me know. I really didn't find much on them, other than that they're an ETF coming in the pipeline behind Coin. So we'll see what happens. You may or may not have seen my article in Brave New Coin. Apparently I write for a blog now. I spent one night before it was due writing it all, so I just kind of wrote everything. I didn't think they'd actually print everything. I thought the editor would cut it down more, but he didn't, which was fine. It's just a little long, a little technical heavy. The article basically goes through where we were and how we got to where we are now. Talks about news events that have changed price, and kind of where I think we'll go past Wyckoff Phase E. So I'll talk about that in the video now, but I thought this line was interesting. The editor put that in. So I'm not getting paid to write for them. Basically the point of this is to get exposure for their index, which I think has a subscription service that you can buy on TradingView. It's called BLX. You can access it through TradingView for free. You can get daily and weekly. I think that's all you need personally for the index. Fran's not gonna like hearing this. He's the CEO, but when I'm looking at an index, I really don't think I need less than a daily. But it's nice. It's I have access to it, but it's not like it's not my go-to thing. I still don't know how they calculate volume, even though Fran has discussed that. Basically, the takeaways were that it's some sort of OTC thing. I don't know. It's just hard to look at this and think this is real, especially with the wash trading coming out of China. Anyway, so that's BLX. So check that out. I'll link up the article in the description below the video as well. And two of the most important charts, I think, sort of new ideas that I haven't seen anywhere else. First one was describing Wyckoff, which several people have done, including myself, for a while now. I certainly wasn't the first one. I think green check mark on Bitcoin markets was the first person who I ever saw use the word Wyckoff, and I was like, oh, that's interesting. I always see people use all these words because my background isn't in financial anything, so I see these words and I Google it and I'm like, oh, cool. And then like I learn about it, and I just use it or lose it, so I try to use it if I find it interesting. So anyway, this is Wyckoff, and I'll link up the long in-depth version on, I think it's stockcharts.com, of like what Wyckoff is, who the guy was, how it's calculated, etc., etc. Point is, there's an accumulation, bullish accumulation at the bottom of like a bear trend, and then we have markup, sort of another accumulation, testing highs and lows, and then we get another phase where it's just up, 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 up until there's no more up, and it's just the opposite of accumulation, which is distribution. So the question I was posing was, how do we know when phase E is over? Now you have to assume phase E will continue indefinitely until there are signs that it's over. It's basically saying the trend is your friend until the end. So let's look at how we can determine if phase E is ending. And what I was saying was a few things. Basically, look for the 5200 EMA cross on the daily. The 200 is this red line here, and the 50 is the blue line here. You can see there's no threat of that currently. Price closes below the cloud for consecutive days, no threat of that currently. Price closes below the lowest support, and that would be the blue on the pitchfork. No threat of that currently. And failure to make a higher high after repeated tests. No failure of that no indicator of that currently. So you can see, we came to this horizontal level, previous local, and we broke out. Okay. So if we come to this previous local again and we don't break out, and we keep trying to break out and don't break out, it's basically the opposite of these tests here. This is a support test, spring. So for the end of phase E, you'd see a resistance test, and then there'd be like a bull trap, I guess. I don't know what to even call it. But the point is, it's just the opposite of bullish accumulation. It's called bearish distribution, or just distribution. All right, so let's get to some real deal charts. I think people fail to realize this, the importance of this, or either just don't realize it's there, or maybe I'm making a bigger deal out of this than I am. But this horizontal here, the fact that we've never closed above this level on the weekly before 2013 on Bitstamp anyway, pretty huge. So you can see we closed and we failed to like stay above it. We certainly parabolic, euphoric moved into it, but we didn't stay above it. So I expect that to be another zone of resistance going up. Again, important dates, SEC coin ETF, and this one is interesting, the 200 days from local high. So from here to here, it was about 200 days to break out. And from here to here, there was about 200 days to break out. So from here to here is another 200 days. So if this trend continues, you'd expect another high, who knows, 16, 18, 3,000, which is insanity, but certainly possible based on previous moves. Whether or not we'll see extended sideways below, this zone, this horizontal zone, or above it, I don't know. I'd guess below it until we get the momentum to break above it. And the reason I'm mentioning this 200-day thing, so I posted this chart on October 16th, and I was saying the sell signals are definitely price outside the upper quartile and double top on the RSI. Well, we certainly got the double top on the RSI. We didn't get the price above the pitchfork, which would have been my sell all my holdings and move into cash signal. Now, the next time I do that, we'll probably end up going parabolic, so I'll get burned either way. But just interesting that we didn't actually make it past that point. Something else to look at, again, this double top on the RSI. Even though I knew to look for it, I still didn't look for it. When we were before the drop and we were up here, it was certainly there. So you can say it's retrospective now, but at the time, you just have to look for that sort of thing. It's also interesting that we came as low as we have on the RSI. Really, this entire trend, we haven't been this low except a few times. Bitfinex, of course, brought us to that low, and we were in the blue quartile. Currently, about that low in the blue quartile. And then this was Mike Hearn, a little after Mike Hearn, below there. So before that, we really haven't been this low on RSI. So Pitchfork, again, showing you where to buy, where to sell, where to buy, where to sell. If we move to... So this was a Big Daddy Pitchfork. If I move to this is the new Pitchfork. So you just take the high, the low, and then the previous low as the anchor. And the median line is the current target for price, the magnet, the return to mean, whatever you want to call it. So that's a new Pitchfork on daily. And if we go to cloud on daily, something else that's interesting, again, you're seeing extended consolidation, accumulation, whatever you want to call it, in or above the cloud. This was a little interesting because it was Bitfinex shenanigans, but you can see even then we bounced right back up to hug that cloud, and as soon as the Kumo twist presented itself, we popped through, and just like here, we had more accumulation, more consolidation, whatever you want to call it. So for this next 200 days, I expect that over a higher high. Now, if we have a 200-day consolidation period, I expect more and more and more consolidation periods after that. So slow moon, basically. If we go parabolic on this leg, I don't expect us to have another 200-day consolidation period. Based on the steepness of these trends, it's definitely hastening the pace that we're going higher faster, but only by a little bit. So each time is a little bit faster. So here's daily stamp, and I just wanted to zoom in to show you how Kijun is so important for price. It always wants to return to Kijun. Kijun is the equilibrium. It's like the median line in the pitchfork, okay? So you can see here we touched it, we never touched it, and we touched it, we went way below it, trying to get back to it. Now if you go back to here, same story. Never touched it, broke through, went back to it, okay? Again, we touched it, broke through it, went back to it, and then broke through. So that's sort of expected, this current bounce back. If we look at that a different way, you may also recognize a pattern on here. So I think I can see inverted head and shoulders just based on those candles. So if we go down to the 4 hour, whenever you see a pattern on a higher time frame, just bump it down to a lower time frame and take a look at the candles inside the candles, okay? And you can see shoulder, head, shoulder, volume profile is definitely there. So you'd expect breakout above this neckline, possible throwback. You don't always need the support test, but if it does occur, you don't want to get stopped out by moving your stop to break even, which is always why you want to keep your stops on a head and shoulders. You know, the first stop is below or above the shoulder if it's a regular head and shoulders. In this case, it's inverted, so it's the stops below here, and then you could move the stop below here once we break out, and then once we're above a certain point, whatever that is for you, you can move the stop up to break even. But I would definitely steer clear of break even until we're much further away from the neckline, just because we often get throwbacks in support tests. So it'll be interesting to see how we break above this horizontal that I'm making a big deal of, because that's the weekly level that a candle hasn't closed above there until basically these candles here. You can see we consolidated above it or near it here, sort of snaking it, and then we made a decision. So we may just, go back and forth between a neckline and this resistance here, and then make a decision from there. I almost expect this not to work out like this. I kind of expect it to fail, and we'll get another test of lows. We'll see. Just because I think this horizontal resistance is so important. The rest of these charts aren't exactly confluence, but they're kind of all saying the same exact thing. So here's how that would look on the cloud. You don't need to know the chart pattern. You just need to know cloud, and you can see cloud is telling you if you were short from up here, your short should be closed here. Why? Because there was a TK cross here. There's a TK cross here. So bearish cross, bullish cross, bearish cross with prices below the cloud, and Kumo is bearish, is a short entry signal, and this is a short close signal when you get a bullish cross below the cloud. So from here to here, this range is not, this is a no trade zone. Okay, you're not touching this because you have no clear signal of bullish or bearish. TK is bullish, but you're below the cloud, so those don't jive, okay? Until you get candles closing in the cloud, then you can start thinking edge-to-edge trades, and edge-to-edge trades are whenever a candle closes in one end of the cloud, you expect it to touch the other end of the cloud. Okay, great. If you want to think of this Tenkin as support, you can. I'm just mentioning that because it's here, but it doesn't always work out like that. It certainly looks good at the moment. So the edge-to-edge trade is showing us about 943 as a target if you got in around 900. So that's a good $40 move. Now, we may fail to go to 943, we may hit 939 and bounce down to here and then bounce back up. But I'm fairly confident that we're going to hit this level between now and 2 weeks from now, probably a week from now. You can say that with confidence because of the length of the flat Kumo. So what fibs don't tell you and what the cloud does tell you is how long the price has sat in this zone. So the longer a price sits at a zone, the higher the probability it'll return to the 50% fib of the entire move. And you don't necessarily see that with just drawing fibs out. Another way you can look at this is with EMAs, 5200. This is all the 4 hour. You can see we had an EMA cross on the 5200. So cross, recross, bullish. So that's definitely an entry signal. And this price action may or may not be bots just trading EMAs. I don't know. That's just conjecture, but I've seen it before. So this is what the fibs look like. And again, the fibs don't necessarily tell you unless you, I don't know, like when I'm looking at this, I can see that this is super long and flat and blah, blah, blah. But when I just draw out fibs all the time, I don't necessarily know that price has been sitting in a zone for a certain amount of time. So the visualization of that on the cloud is just really helpful for me. But you can see 50% fib is acting as resistance, just as it was here. And then, like I said, the target of the head and shoulders would be up here, just the measured move, which is basically back to where we were, this horizontal zone here. And then if we add the new pitchfork onto all this conjecture, I can see us sort of hitting the median line, consolidating a little bit, and then going to the next rung up on the ladder, which is essentially the horizontal here. So I can see us hitting resistance at 1150 again, and then just sort of like figuring stuff out from there. And then lastly, if we go to the hourly head you get in, so this head you get in before the head and shoulders even completed, the inverted head and shoulders even completed. And you can see on this candle here, this is your entry signal. Boop, right here, 840-ish, let's say. That's your entry signal. You may or may not have gotten stopped out here, depending on how you're trading the crosses. So you can trade these with the Kuma breakouts two ways. One is you just long every breakout and only close when you see a TK cross. And the second way to play this is with fractals, which you'd be looking for a high, low, high fractal, and that level would be your stop. So here you have a high, low, high. This would be a fractal here. Your stop would be here. Then your stop would be here. So you'd be stopped out here, and then you get back in here. Depending on how you want to play that, how long you're looking at the chart. If you're not looking at charts, 18 hours a day, you're probably not going to play those stops on the hourly as much. I don't know, it's up to you. So that's all I have for today. Like, dislike, share, subscribe, hit me up on Twitter, Telegram. Check out the article on Brave New Coin. It's kind of long, talking about a lot of stuff if you've missed anything over the past 2 years. And happy trading.